Me a water. Yes, please. Thank you. Nope. Thank you so much. Thank you. Mm-hmm. Share my screen. Mm-mm. And move this out the way. What is up? All right. Um, all right, let me do one more thing. I think I'm ready.
Take your time. I'm waiting on you.
All right. I am ready to go. We are live on YouTube as well. Thank you to those of you that are in the Zoom room and those that are coming. I am Kimberly Janelle, CEO, founder of the Intent to Profit community, where I teach you how to, let me back that up, where I teach you what the IRS looks for. Point blank, period. I teach you what the IRS looks for, and then I teach you how to implement that in your business. It is my goal to help every entrepreneur that I encounter learn how to show their intent to make a profit. That is what the IRS is concerned about. So, tonight we're going to talk about bookkeeping, the basics of bookkeeping. Many people don't understand what bookkeeping is, why it's important, why it's something that they need to learn. Many people don't um, make themselves available to bookkeeping and bookkeeping basics because they think, that's something that wealthy people do. It's not anything that I need to be worried about right away. And it is the absolute worst thing that you could do, is to not know what bookkeeping is. So just brief about me. If you hear, you know who I am, okay? I'm a wife to an amazing man. Got some kids, some grandkids, got some on the way. I think what's most important is that you need to know that I'm not just somebody who um, got some sound bites from social media and decided to try and recycle those sound bites, or somebody who seen some videos and decided that I was going to try to say the same things that other people are saying. Like I am an OG in this thing. I've been in the tax game since 2007, and this ain't no plaything for me. So, associate's degree in accounting. Basically, your girl know what she's talking about, okay? And so, by the end of this workshop, my goal is to teach you how to track your money easier and how to grow your business faster, because it's not about, you are only worth what you can prove. Let me say that. You are only worth what you can prove. And so I don't care if you tell me, yeah, I bought out last year, sis. I made probably round about like, first of all, probably round about like means that you can't, you don't know how much you made. For real. For real, for real. You don't know how much you made. I was on a call earlier today talking about my business, talking about personal business, and then we talked about me and my husband's comedy company, and they said, "Well, how much revenue did you guys generate?" And I said, "Hold one moment, please." That's all I could tell you. And I told her to the penny. Why? Because I track it. Okay, you gotta track it. All right. So why does bookkeeping matter? It makes tax time less scary. Number one, you ain't got to be searching and looking for nothing. You don't have to search and look for anything. Everything is in one place. It helps you to know if your business is making or losing money. How in the world do you know if you're making money if the moment that you get it, you spend it? If the moment that you get it, it comes in multiple different ways. You got to look over here, and you got money coming in over there, and you got people putting cash in your hand, and you got money coming in back this way. You have no idea if you're making money or if you're losing money. And there is a difference between making money and making a profit. Okay? Because you can sell stuff, and as you sell it, obviously you're making money, right? If you sell slices of pizza, I have this in one of my workshops as an example that I use all the time. If I have 4 pizzas and I sell each slice for $8, and at the end of the night all of my pizza is gone, then of course I made money, right? But the other part of the question is, did I make a profit? Now, if I made $200 at the end of the night and I sold all of my pizzas, yes, I made money. I made $200. But if it cost me $250 to get to that selling event, I did not make money. And there is a difference, okay? The other reason why bookkeeping matters is because it shows if you're meeting your goals, if you're saving for growth, if you're paying yourself for staying out of debt. You have no idea if you are hitting benchmarks and targets because you're not keeping track of it. Okay. I wanted this year, I want to make 100 grand. I want to make, okay. Then you can set the goal. You can say what you're going to do. But if you're not tracking it, if you're not keeping track of anything, you will have no way of knowing whether you have hit those goals or not. Okay. So let's talk about bookkeeping. And I want you to think about it like a literal book. Okay. When you open up a book, there's chapters. And then within each chapter, there's sections. And sometimes the chapter talks about 2 or 3 different sections. And then in each of those sections, there's details. Okay. Your business is exactly the same way. So I want you to think about the chapters of a book as the main category. Those are the big buckets, like revenue. Another word for revenue is income. Okay. So one bucket is income or revenue. Another bucket is cost of goods sold. Let me explain to you what costs of goods sold is. This category, this bucket, does not pertain to every business. Now, that's one thing I want you to understand about bookkeeping is that every bucket does not pertain to every business. People Rich Comedy, which I own with my husband, we don't have a cost of goods sold bucket. Why? Because cost of goods sold is only for people who have raw materials that they have to go buy to put together for their final product. Let me give you an example. If I had a candle business and I had to go buy wax and wicks and glass jars and fragrance, those are my cost of goods sold. What does it cost for me to get the goods for me to sell my final product? Let me give you a different example. Let's say I have a restaurant, okay, and I sell soul food. My cost of goods sold is my raw chicken, my raw ribs, my raw pulled pork, or my raw pork butt. My cost of goods sold is the barbecue sauce. It's the cheeses for my macaroni. It's the macaroni noodles, okay? What are the items that I have to purchase and put together for my final product? That is your cost of goods sold. How much does it cost for the goods that I sold? Okay? Another big bucket is expenses. Expenses are across the board for every person, for every business, excuse me. Revenue slash income is a bucket that pertains to every business. Expenses is a bucket that pertains to every business. Cost of goods sold only pertains to your business if you have to buy raw things or individual things to make a thing. Let me give you another example. Let's say you have a wig. I have a good friend who, she used to be a cosmetologist behind the chair. She came from behind the chair and now she makes custom wigs. So her cost of goods sold would be the bundles. They would be her needles, her thread, they would be her wig caps, right? It's all the things that she needs to make the wig, the final product. Okay? Let me know if that makes sense. Is that making sense for you? All right. Big bucket. Then within that chapter, so within that big bucket, let's talk about revenue or income. In that bucket, we have sections. Those are the subcategories or the different types in that big bucket. So what are the different ways that we make revenue? So within revenue, we have online sales, we have in-person sales, we have pre-orders, we have all these different ways. Or let's say for revenue, we have let's say for my business, Kimberly Janelle Enterprises. The different ways that I make revenue is tax preparation, strategy sessions, workshops, ebook, masterclass. Those are the different ways that I make money in my business. So in your big bucket revenue, you have the different ways that you make revenue. The same is true in expenses. Now, in expenses, you have different types of expenses like advertising, like supplies, like office supplies, like meals. Those are subcategories. Okay. And then you go down a little further. Then you got to have notes and details of each of those things. So for revenue, if I have online sales, my notes could be like tonight. If I charge for tonight, web class November, what's today? 20th? November 20th. Web class, masterclass. Okay. And let's talk about expenses. If I have a business meal, if I meet a potential client or somebody that I'm doing business with, and we go meet over a meal, my notes, my details is my receipt. And on my receipt, I'm going to write who I was with. I'm going to write what we were talking about. And it doesn't have to be a whole bunch of details on that receipt. But if the IRS comes knocking on my door 3 years from now and they ask me for proof of my three largest expenses, because that's how it works, and I print out sheet after sheet after sheet after sheet of receipts because meals was my biggest expense, okay? But on every receipt, I have written in the top right-hand corner who I was with, first initial, last name, and what we talked about, whether it was a upcoming comedy show or a debrief from a gig or consulting somebody about their business. I just got to write a few little notes on that receipt so that if somebody asks me 3 years from now, 6 years from now, 17 months from now, who is J. Bolden? Oh, my girl Jennifer. She's an upcoming comedian. We talked about what it would look like to put her on our show in the following months. We talked about her set, what da 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 da, right? It'll spark my memory, and that is your proof. The IRS don't care nothing about how passionate you are about anything. The IRS don't care how hard you work. They care about your proof. And if you can't prove it, it didn't happen. All right? Let's keep rolling. So this is just a example. I kind of already went into detail about this, but so your main category is your chapter, that's revenue. Your subcategory is the section, online sales, and then your detail is that it was an Etsy sale, or if you have multiple ways that you can take sales online, maybe it was a web, uh, um, not a Etsy sale, maybe it was from my website, maybe it was a website sale, maybe it was from an affiliate, maybe it was from one of my partners, somebody that I've partnered in business with, maybe it was from their link because they're an affiliate. Okay. Cost of goods sold, your packaging. If you have products that you package up, like I said with the candles, buying those jars that you pour the candle in, that's part of your cost of goods sold. The label that you stick on the front, that's part of your cost of goods sold. Okay. And then expenses, subcategory section is marketing. And then to go into further detail is Facebook ads. That was the marketing expense. Okay. All right. So that's your big buckets of money. That's a overview. Let's go into a little more detail about them. Okay. So your revenue. This is the money that's coming into the business. Everything your business earns. So this is retail, online, wholesale, special edition, in person, don't matter. I want you to take a few moments and write down the ways that money comes into your business, where it comes from or where it will come from. There's some examples that's on the screen. How do people pay you? Do you have a payment processing system? If you get payments and they go directly into your bank account, preferably a business bank account or a bank account that's separate from your personal account. You got to have a separate. I'm going to get on my soapbox here for a moment, just for a moment. It doesn't matter if you have an LLC, if you are a sole proprietor, if you're just starting out, if people are paying you, you got to have a separate bank account for that money that's coming in from your business, okay? It does not have to be a business bank account. It could be a savings account. It just cannot be the same account that you pay your rent out of, your mortgage, your light bill, your car note. That's your personal account. And money you make in your business cannot play in the same account that you pay your personal expenses out of. It will get you in so much trouble. Maybe not today, maybe not tomorrow, because that's how the IRS operate, okay? But years down the line, when they want you to prove that you're actually operating a business and you got this money playing around, it's called commingling. It doesn't matter whether you have an LLC or not. If it is commingling, if it's playing around in the same account, then the IRS can say, you ain't even serious. This ain't even no business. This is a little hobby. You can't write off expenses for a hobby. Okay. Let me also get on this payment processing system for a moment. Okay. Many entrepreneurs start out in business, whether they start out intentionally in business or not. Many people accept money in a multitude of ways from multiple different spaces, places, faces. And then when it's time to figure out how much they made, they don't know because they got money coming in from Cash App. They got money. You can Zelle me, Venmo. You could send it Cash App, or I take cash, or I got PayPal, or like all these different things. And what that causes for you as an entrepreneur is overwhelm. Because when it's time for you to report how much money you made, when it's time for you to pay self-employment taxes, oops, you probably ain't paying them because you don't know how much money you made. You got stuff all over the place, right? So if you are a business owner and you are taking money online, I recommend to you, and I'm gonna have a workshop on that here in a little bit. I recommend to you to create a Stripe account. Stripe. I ain't gonna talk to you about nothing else. Square, PayPal, I ain't gonna talk to you about nothing else. Why, Kimberly? I'm glad you asked. Because when we give people options of things, then first of all, most entrepreneurs don't even know what they need anyway. So if I tell you, okay, go compare Stripe to Square and see which one, you don't even really know what you need. So you don't know what you're comparing. You don't know what feature. Oh, they got this feature, so I need to go. You don't know. You don't know until you start using it and you get into business and then you're like, you know what? I really would love if I could do boom, boom, boom. Then you start comparing apps and features and capabilities. But until then, you just need to use something, okay? And I always recommend Stripe. I'm going to always recommend Stripe, and let me tell you why. When you create a Stripe account, it is free. It is free, 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 free. It is not one of those platforms where you got to pay for a subscription. None of that is free. You set up the Stripe account, and it's going to verify you either as a person or as a business. But once you get into Stripe, you can create what's called payment links. And you can create QR codes on your payment link so that people can pay you through Stripe. Now, here's the beautiful part. When somebody clicks on your payment link, and I'm telling you, I use it for my financial firm. I use it for our comedy show. If people want to buy tickets for our comedy show, we have a payment link. It's a QR code. When they scan it with their phone, It opens up to this payment link. They can select however many tickets they want, and they can use whatever payment option they want. Now, here's where the beautiful part is. They can use whatever payment option they choose. So when they open up our payment link, if they got an iPhone, then Apple Pay is an option. If they have an Android, then Google Pay is an option. They can also use their debit card. They can use Cash App. They can use Klarna. They can use whatever they want to pay for their tickets. But guess what? Our money comes in to one place, one way. I don't have to go check Cash App. I don't have to check PayPal. I don't have to go I don't have to do all of that. My payment link gives my clients the option of how they want to pay me. I don't care where they pull their money from. I don't care if they put their routing and account number in. That's an option. When you buy tickets from us, you can put your routing and account number in. That's an option. I don't care if that's how you do it. I don't care if you use a debit card, credit card. I don't care if you put it on Klarna. I don't care if you pull it from your Cash App or your Apple Pay. I don't care. All I care about is that when the sale is done, that it's in our payment system and it goes straight to our bank account. I don't have to do all of that running around and figure out how much money we made. It's in one place. And when I look at our transactions for the year, we've had people pay us a multitude of ways. We have people pay by Cash App. We've had people use their debit card, credit card, Apple Pay, Google Pay. We've had there's this thing called Link that if you pay online, you can store your debit card, and every time Link is an option, you can just use Link. There's a multitude of ways that people have paid us for tickets. But I don't have to run all over the place trying to figure out how much money we made for the year because we have a payment processing system. Okay? Also in that payment processing system, I can create an invoice. So if we've done some work for people, if my husband has went and done comedy for people, I can send an invoice from our Stripe to whoever it is, to their email. And in that email, there's a link where they can pay the invoice online. And guess where that money goes? You're right. Straight into our payment processing system that then goes into our bank account. Now, let me tell you the other blessing about these types of payment processing services. When Stripe collects our pay, Stripe holds our pay in their system for like 48 hours. So that if somebody wants to, because this is a thing now, people will go and file a claim and say that they did not purchase what they purchased, right? And then they'll get their money back. Stripe handles all of that for me. So I don't have to worry about disputes and none of that. If somebody tried to get their money back, Stripe handles all of that for me. And money's not pulled from my bank account. I don't have to worry about NSFs and none of that. That's the other benefit of using a payment processing system. It protects your revenue. Okay? Every business owner needs one. And I don't care if you're making $50 a month or $50 a day. You need a payment processing system. I recommend Stripe. Okay? It is very user-friendly. It's pretty easy to get set up. I'll have a class on that. Is it this month? Look at my little list. I don't think I'm having it this month. I don't know. I might pull that out because it's ready. It's ready to go. That curriculum is ready to go. But yeah, I recommend Stripe, okay? For your revenue. All right. Got my little notes right here. Okay, next is cost of goods sold. These are the things that you buy to make or sell your products. This is materials, packaging, ingredients. Now I want you to write down, what would your cost of goods sold be? If you have baked goods, I have a client that makes cakes, little bundt cakes. Her cost of goods sold will be eggs and milk and sugar and flour and right? I have another client that does have a restaurant, soul food, raw chicken, raw pork, barbecue sauce, the to-go containers, like so much stuff, right? Candles, wax, wicks, the scents, the jars, the labels. Now, if you offer a service, you don't have a cost of goods sold because you don't have a good that you're selling, okay? But that's your cost of goods sold. All right. This is the good part. This the good part. Operating expenses. Things that you have to pay to keep the business running. What do you have to pay in order to keep your business running? Now, some of the examples, I gave you some examples, but let me clarify one example that's listed there. And this is a topic that I always love to talk about. I have rent listed as one of the expenses. And this is if you have a physical building, if you have a storefront, the rent that you pay, or if you rent a room, or you rent a warehouse, or if you rent space to run your business. I am not talking about if you rent your home and you run your home out of your business. That is not an operating expense. That's part of a tax strategy. The home office deduction. That is not an operating expense, okay? So rent in this example is only speaking to if you have a physical space that you pay rent to. Let me also clarify. If you have a membership at a co-working space, let's say you have a membership and you meet clients there 3 or 4 times a week, or maybe you just go there because you need to work, because if you work from home all the time, you'll be distracted by the laundry and the dishes and the dinner to get started and all the stuff, right? If you have a space that you rent, that you go meet clients, co-working space, that rent, that membership is an expense. Okay? It is an expense. That's right. Rent is a physical space outside of your home. Okay? Here's some other areas that you need to keep track of in your business. You got to keep track of interest expense. If you have credit cards that you use for the business, let me stay right here for a moment. I had somebody ask me, well, Kim, I have these credit cards. They're personal. They are I got them with my social security number prior to me starting the business, but I only want to use these. I need to use these to help me get started in the business. Can I claim what's on here? Absolutely. If you can show from the date that you started the business to current that you only use this credit card for business, then the interest expense that you pay for that credit card is an expense to the business. It is a write-off. You are allowed to write it off. Okay? If you got a business loan and the loan is 11%, 2%, 4%, whatever that interest is that you pay on that loan is an expense to the business. Let's talk about sales tax. I hate is such a strong word, but I really feel it like that. I despise sales tax. Sales tax is one of those tricky things. Depends on the state that you live in. It depends on the type of products that you sell, all this stuff. If you just sell goods, it's a flat rate. But if you sell food, then there's sales tax. There's food and beverage tax. There's alcohol tax. There's all these different taxes that equate to sales tax. They're basically sales tax. So if you sell goods, then you should charge sales tax. Okay. Payroll tax, if you have employees, you are not an employee of your own business. You cannot be the owner and an employee. So you should not be putting yourself on payroll unless you have an LLC that is taxed as an S corp, and that is a huge tax strategy. That if you're not making close to six figures in your business, you should not be an S corp. Okay. The other tax that we don't talk about, or is rarely talked about, is self-employment tax. So let's just stay right here for a moment. Okay. Self-employment tax. When you work a 9 to 5, let's say you get paid every 2 weeks, you make $20 an hour. Is that easy math for me? That's easy math for me. $20 an hour, 40 hours a week. You make $800 a week, right? You get paid every 2 weeks. So your check before taxes is $1,600. Am I tracking on my math so far? $20 an hour, 80 or 40 hours a week. That's $800. I'm right, $800 a week. You get paid every 2 weeks. So that's $1,600 before they take out taxes, right? So every 2 weeks, you get that paycheck. You don't get to 1,600. You get 1,432. You get 1,417, right? Because your employer takes out payroll tax, income tax. Let's say it that way. They take out payroll tax. Okay? But when you work for somebody, they pay half and you pay half. So when you're employed by a company, you only pay 7.65% for Social Security, Medicare, all of those taxes. You only pay half. What the IRS gets on your behalf is 15.3% in taxes, but you pay half, your employer pays half. Okay? They take that money out every 2 weeks, put it in a bucket, and they hold it till the end of the quarter. At the end of the quarter, they send those payments on your behalf to the IRS. The IRS is a pay-as-you-go system. I want you to debunk the idea that you can just put money in a tax account all year and then send them their money at the end of the year. Let me tell you that even if you don't owe them money, or if you end up with a refund at the end of the year, you can still get a fine for not paying into the tax season throughout the year, because the IRS don't want to wait to the end of the year to get their money from you. They want their money from you as you earn it. You got paid, they want to get paid, but they're going to be nice and let you wait to the end of the quarter. They're going to let your employer wait to the end of the quarter to send them their Skrilla. Now, employers who mess up and don't do that like they're supposed to, they have to send money to the IRS every month. So first paycheck, they're going to hold it. Second paycheck of the month, then they got to send it all. That's if they've been messing up. Sometimes companies opt to pay taxes every month just to keep them on a regular, right? But taxes are due to the IRS at minimum every quarter. Okay? Now, if they want it every quarter from big business, when you decide to work for yourself, the rule is still the same. Now you're the business. Whether you are a sole proprietor, an LLC, taxed as an S corp, you the business now. And the requirement is still the same. The IRS requires for you to send them they 15.3% every quarter. Now you don't have somebody splitting it with you. You pay 7.65 and your employer pays 7.65. You're the employer now. So you paying it all, 15.3%. Okay? Here's how you do that. Let me back up before I say that. How do you know what you have to pay? Well, it's because you track. Goes back to why you need to track your bookkeeping, why you need to track your revenue. If you don't know how much money you made in January, February, March, you don't know how much to send to the IRS in April. If you don't track it in April and May, you don't know what to send them in June. Does that make sense so far? So let me tell you how you do that. Okay? You have to create a system. And depending on how much money you make and how much activity you have in your business, maybe you have enough activity that you can create a spreadsheet. You can keep a spreadsheet of money coming in when it comes in. Okay? No problem. Do that. But what you need to know are the dates. Do I have that in here? I do. So let me not get ahead of myself. I got like 4 slides about self-employment tax. So let me keep going because I'm getting ahead of myself. I'm so glad it's in here. I forgot that it was in here. Okay. Other income and expenses that you need to keep track of, they may pertain to your business, they may not. If you have one of those credit cards that give you rebates, so like if you spend $1,000, then they'll give you back $10 every month. That's considered income to your business. It's a rebate, right? When you sell old equipment, that's considered income to your business. Here's something that most people don't know, okay? When you have people who ditch out on their bill, let's say this has happened to me before, which has made me change the way that I did taxes. I trusted people way too much, and they was like, "Yeah, can you just do them and send them, and then when I get paid on Friday, then I'm gonna pay you." And I'm like, "Yeah, I know these people. They ain't gonna do me like that." And did, and did. Okay, I could take that tax prep fee. Let's say it was $400. If I tracked it, because I tracked it, I could claim it as an expense to my business, unpaid debt. It's a write-off. That was money that was owed to me that they never paid, and I can write it off. That's why they tell you don't when bills get so old, let the company write it off. It's an expense to them. They can write it off. Okay? I'm not encouraging you not to pay your bills, but I am telling you that if you don't pay it, then the company can write it off. Okay? All right. So here's some tools. You need some tools that make life easier for you. You need stuff that is a set it and forget it kind of thing. You need an app that can track your mileage because so many people are leaving money on the table by not tracking their mileage. You need an app that can capture your receipts. I personally need to get back in the habit of this. There was a time where I was so on point with using my app that I would go into the gas station, maybe because I don't put gas in my car. I don't do that no more, child. My husband, I kind of internally throw a fit if I have to pay for gas. So that might be why I got out of routine of doing that. But there was a time where I would go in to pay for my gas and I would have my app open. I would pay for my gas. I would get the receipt and I would just slide over to the next window, lay that receipt down. My app would already be open. I would take a picture of it, make sure that it's saved, and I would throw that receipt away on my way out the door. I didn't need to keep it because my app captured it and it stores it in the cloud and it's there forever. Okay? You need an app that can create invoices. You need an app that can categorize expenses and calculate your tax deductions. Now, these apps that I have listed here are just a few. They're just a few. Let me talk to you about them. QuickBooks is probably there ain't no probably. It's the one that I'm going to recommend because it does all of those. It tracks your mileage. If you download the app on your phone, it tracks your mileage. You can take a picture of the receipt. You can create an invoice in QuickBooks on your phone. It categorizes your expenses and it'll tell you, hey, you made this much money. Based on how much money you made, you probably gonna owe this much for the quarter in taxes. Okay. Mile IQ is an app that only tracks your mileage. Now, let me be clear. Let me give a disclaimer. Today is November 2025. I have not looked into Mile IQ for a while, so it may have enhanced features now. I don't know that. I don't know that it doesn't do more, but it's Mile IQ. It was created to track mileage. Stride is another one. Everlance is another one to track mileage. I don't know what the rest of the features are. It did not have all of those other features about being able to create invoices, categorizing your expenses and deductions. It literally just kept track of your mileage and car expenses. If you want to use some of these different apps that do different things, just know that when it comes time for taxes and to be able to document all these things, you're gonna have to go to all these different places to pull this stuff together, or you can just use QuickBooks. Okay. Maybe you don't have a lot of activity in your business right now. You're just getting started and you don't need, you know, you have 3 or 4 transactions a month, maybe. Um, you can use a spreadsheet. Those are free and easy to use. I'm gonna have some resources at the end of this that if you are um, on a computer, if you're on a computer or iPad or something like that, you'll be able to scan these QR codes at the end and get these free resources. If not, I can email them to you. That's no problem. Dropbox. Dropbox is again, you can start a Dropbox account for free. You can take pictures of your receipts and put them in your Dropbox if you don't have a whole lot going on right now. But if you start getting to the point where you are accumulating a lot of receipts, you want to get a bookkeeping system. Let me tell you why Dropbox it is not a long-term app to use. When I use QuickBooks and I take a picture of my receipt, it adds the dollar amount of my transaction into whatever category it fits in. So if I take a picture of my gas receipt, it's going to put that total into auto expenses. If I take a picture of a receipt from Fazoli's, it's going to put it in meals. Like it's going to categorize it for me. And if it doesn't quite know what the receipt is for, then it'll ask me, "Hey Kimberly, clarify for me what's this for? Is this equipment? Is this supplies? Is it advertised? Like what is it?" And once I tell it what it is, then the app is so intuitive. It's like, "Oh, okay. Now, every time you send me a receipt from this place, is it always going to be advertising when you send this to me? Just want to be sure." And I'm like, "Yeah, girl, every time I send you a receipt from this person, it's advertising." They like, and QuickBooks is like, "Oh, okay, girl, I got it." So then every time I send a receipt with that same name, business name, organization, whatever, then QuickBooks says, "Oh yeah, you already told me this advertising. Let me put it over here." Then at the end of the year, I don't have to go back through my receipts and try and figure out what it is and say, "Oh, okay, this was meals. Let me write this over here. Okay, this one is for equipment. Let me write that here." And then go through and manually add up every category. I don't have to do that using QuickBooks. Okay, I don't have to do that when I have QuickBooks. You will have to do that if you have a spreadsheet. If you're using a spreadsheet, you will have to do that if you're using Dropbox. Okay, this is about making life easier. Okay. Right. What about these taxes? Now I already kind of got started on the taxes, and we're gonna pick up where we at. I already told you that's a pay-as-you-go system. If somebody tell you you can save your money to the end of the year, slap them and tell them that Kimberly Janelle said, no, you cannot. Okay. The expectation does not change when you start working for yourself. As a self-employed person, you are expected to track your income, and after every quarter, you got to send an estimated quarterly payment to the IRS. If you use QuickBooks, it calculates it for you. Okay? They're going to be like, "Hey, player, good job. You made another $1,000. Okay, that added about $7 to the tax that you need to send to the IRS." Okay? There is a form. If you don't want to use software, there is a form that you can use. I like to provide receipts. I call it hashtag receipts. So you will notice that the IRS website where you can find this is in my presentation. I don't want you thinking I'm making none of this up. This is directly from the IRS website. This is a form that you can either fill out yourself to do the calculations, or you can hire a professional to help you do that. Okay. This is the website that you make that payment on. EFTPS. EFTPS. If you put that in the search on Google, EFTPS, IRS, EFTPS, is going to bring you right to this page. Okay. This is the only place that you should make a tax payment for your business. Okay, I hear you. When are they due? Write this down. Write that down. Babe, Dorian on his way. Okay. Well, how do I know if I'm a business? How do I even know? How do I know? Well, here's a surefire way to know if the IRS looks at you like a business. If you've ever had to fill one of these out, they consider you a business. Okay. If you've ever got one of these at the end of the year, they consider you a business. Okay. This is what the newer form looked like. If you've ever gotten one of these, PayPal, Stripe, Etsy, right? They consider you a business. Now, where does that income go? Any money you make in your business will be reported here on a Schedule C. It will always be connected to your personal tax return. It's never a separate return. I had a girl tell me, yeah, so I got my personal taxes done. I just need to do my business return. I'm like, baby, somebody lied to you. Now you're going to have to do an amendment because it's supposed to be connected to your personal tax return. Okay? Notice underneath the form, the document title, profit or loss from your business, it even says sole proprietorship. That means whether you have claimed a business name or not, whether you have an LLC or not, that's all considered under the same form. Okay? You have to report every dollar that you make, even if it's under $600, even if you didn't get a 1099, even if you don't have a business bank account and it never touched that account and it's all been cash. You have an obligation to report that money and the IRS sees you as a business. Okay? So, what do you need to know now? Okay? One of the things that I love to break down is the difference between business and hobby. Okay. Again, you can see my receipt up there at the top, the IRS website where this is found. People get so consumed with the wrong thing. And I want to shed light on what's accurate and true. You hear people say, well, you can't carry a loss for 3 years. You got to have a profit 3 years. Or if I carry a loss 3 years, I have a profit. That's absolutely not true. That's not true. There are businesses whose tax strategy is to run at a loss every year. And they never get audited. They never get their deductions excluded. It's because of these things right here. Okay? There's 9 factors that the IRS uses to determine if you are actually running a business or if this is just a plaything for you. Okay? And the number 1 factor says whether you carry on the activity in a business-like manner and maintain complete and accurate books. What does that mean? You gotta have bookkeeping. This is how you carry on like a business. You gotta separate your money. That says to the IRS, I'm operating as a business. I may not know everything, but I got separate bank accounts, which means that this is business for me. You got to have a record keeping system. The more simple it is, the more you'll stay committed to it. It's got to be a set it and forget it type of system. Okay? And this is what I mean by set it and forget it. Once you create the profile, set up the account, and you link it to your bank account, there's nothing that you have to do to make it keep doing what it's supposed to be doing other than going in once a week. Whether it's a Sunday night while football is on and you sitting with your dude and he watching football and you going into your app. Or it's on a Thursday night when your shows is on. Or if it's Saturday morning while you're having your coffee and your quiet time. Whatever it is, you got to set a regular time every week that you open up that bookkeeping app. And you go in and you tell QuickBooks, hey girl, this was advertising. Oh yeah, this was when I had a repair on my car. Oh, this is, I bought some office supplies. Or, oh, this was a business meal. You got to go in and tell QuickBooks that every week. Okay? You also got to go in and tell QuickBooks about your mileage, because there's a part in the app where you can turn GPS on, and every time it senses that you're moving, it's like, oh, let me keep track of Kim's movement. She's moving, she's moving, she's moving. And when you stop moving, it stops. And then it senses you're moving again, it starts a new record. She's moving, she's moving, she's moving. And then it senses that I stop, and it stops. Well, every week I have to go in there and tell QuickBooks, oh, girl, I just ran to the grocery store. This was a personal trip. This was when I went from the grocery store back home. Yeah, this is personal. I'm going to swipe it one way because it's a personal trip. But then I look at this other trip and I say, oh, well, this is when I was going to go meet that entrepreneur at Fazoli's. And I'm going to swipe it another way because it was a business trip. And then I went from Fazoli's to the bank. That's still business. I'm going to swipe it another way. And then I went from the bank back home. Business. Because when you claim mileage, the IRS is going to ask two things. First of all, it's going to ask me, well, how many miles, Kimberly, did you drive all year? Well, if I ain't tracking it, I don't know, right? And then it's going to say, okay, of the 14,000 miles that you drove for the whole year, how many of those miles was for business? Well, if I ain't tracking, I don't know. But if I got QuickBooks, if I got the app on my phone, if I got the GPS turned on, all those times that I sit with QuickBooks and say, no, girl, that was personal. Or, yep, that was business, business, business. QuickBooks is doing it for me. So at the end of the year, when I go to pull my mileage log, QuickBooks is like, girl, you drove 13,782 miles. And of that, 7,413 of them was business. You're welcome. Simple. Okay? The last thing is investments into your business. You got to know what you can write off. You got to know what you can write off. Okay? And the investments that I'm talking about are not what you think. It's this. Anytime you pay to sharpen your skill or increase your skill level, that is an expense to your business. So you pay for a strategy session. You pay for a coach to help you for 6 months. You get into a mastermind program. You pay, if I pay for an accelerator class to learn about some tax strategies, how I can help implement them for entrepreneurs, that's a write-off. If I got certified as a, which I'm going to do this as a certified tax problem solver is what they're called. That's a write-off to my business. Any training programs or licenses. Now, let me be very clear. It has to be directly related to your business. I cannot, as a tax strategist, go pay for a certification in manicures and pedicures, or I can't go take a class on facials and that be a business write-off. It has absolutely nothing to do with tax, finance, strategy, none of that. Okay? So it has to be directly related to either sharpen my skills or increase the level of skill, or increase the service that I can provide. So if I started out just as a tax preparer and all I know how to do is do taxes, but I don't know how to teach you how to maximize your write-offs or nothing, but some other professional was teaching that, learn how to master the Schedule C, learn how to, and I paid for that, that's advancing and strengthening my skills. It's a write-off. Okay? It is a write-off. If it does not directly relate to your business, it has to, the skill side of your business, it has to help you increase your business acumen. That's the word I'm looking for. So if you pay to do anything with me, it's increasing your business acumen. It's helping you to learn what to look for and how to narrow in on the finances of your business so that you can keep better track of your money. That is a write-off. Okay? This is some common deductions, some very generic deductions Now, all of these do not apply to every business. All deductions are not created equal. Okay? But I do want to point out a couple that people leave out all the time. They leave money on the table. Startup costs. Do you know that you can write off up to $5,000 in startup costs when you first start the business? Before you ever get an LLC, before you ever get an EIN number, you can go back and write off up to $5,000, but only in the year that you started the business. So I can't in 2025 say, yeah, I spent like $5,000 in 2022, but I didn't really start the business till this year. So can I claim it? No, no. You have to claim the deduction in the year that the expense was incurred. Okay? Clothing, that's a tricky one. Clothing is a tricky one. You can't just go buy a new suit and write it off because you going to some networking something and you need to have something to wear. You can't do that. Okay? Business travel is a whole thing. I should do a workshop on business travel, how to write off business travel. I'm about to do that. I'm gonna write that down. That's a good one. To do a workshop on business travel. Business travel is my favorite deduction. It really is. Business travel. Yeah. Because we don't take vacations. We take business trips all the time. Anyway, let me keep going. Okay. Goodwill. Goodwill is not the store. Goodwill is oh, what's the easy way to explain goodwill? Goodwill is oh, am I going to say this wrong? Oh, my phone is right here. Goodwill has more to do with the intrinsic value of services that you provide. I won't go down a rabbit hole on that, but Goodwill is not the store Goodwill, okay? And then I think all the rest of these make sense. Home office deduction. I'm gonna do a workshop on home office deduction too, because I think that would be amazing. Okay. These are the industries that are most often audited. There's a whole tax code for these businesses. Code section 183. These businesses fall in code section 183. They get the most scrutiny. These are the people who don't really work as hard to prove that they're an actual business because they don't keep track of stuff. So they're always on the radar. Always. Always. Okay. So let's do a recap. Track everything. Track everything. You need to use your main, sub, and detail to stay organized. You need to keep receipts and notes for proof. Good bookkeeping means that you have less stress and you save more money. Okay? So I want you to think about what's one thing that you need to do this week to get yourself on the right track. Just one. Don't overwhelm yourself. This made me think of my husband. My husband be like, "Yep, so I'm gonna start working out. I'm gonna work out 2 hours a day, 5 days a week." And I'll be like, "Babe, can you like how about you just go on Monday? Like what? How about you just yeah, just scale it down a little bit because then you overwhelm yourself. And then when you don't go, then you like, I ain't worth nothing. I ain't. No, just what's one thing that you'll do this week to get yourself on the right track. Now, I promised you resources. Here are some resources. If you are on your computer, then you can use your phone to scan these resources and you can have them. You're welcome. Some bookkeeping worksheets to kind of go along with what I taught tonight. The middle one is the top 10 tax write-offs that most people forget or neglect. And then the third is your business expenses worksheet. Now, let me tell you about this business expenses worksheet. I'm so proud of it because I know firsthand how thorough and accurate and successful, how well it works. This business expenses worksheet. If you take this worksheet and you put your numbers on this worksheet and you take it to your tax professional, they will know exactly where all these numbers go. If you take it to your CPA, your accountant, whoever, they will know exactly where these numbers go. You have CPAs a lot of times that say, well, you know, you need some write-offs, but they don't tell you what those write-offs are. They don't tell you how to keep track of them or anything. I've had entrepreneurs use this business expenses worksheet in a multitude of ways. You can print off 12 and you can use this as how you keep track of your money each month. Or you can use QuickBooks or whatever spreadsheet, whatever else you want to use, and you can just put your totals for your business at the end of the year on this sheet and give it to your tax professional. Either way, it helps you to keep everything in one place. It helps to make sure that you don't leave anything out. And again, if you give it to your tax professional, they'll know exactly what to do with these numbers. Okay. Let me tell you a couple ways that you can work with me. And I don't have the slide in here because yeah, I don't know why I don't have the slide. I don't know why I don't have the slide in here. Couple ways that you can work with me. Number one, I do what's called strategy sessions. Okay. These strategy sessions, I used to only do them for 60 minutes. I'm increasing them to 90 minutes. And that is because I ask a lot of questions about you, your business, how you take money, where you get money from, what do you pay out, what do you need. I ask about those big buckets, right? Revenue, how does the money come in? I ask about expenses. What are stuff that you're paying? What about with your car? What about with your house? What about this? What about that? What about this? And then I go through that business expenses worksheet. I go through that worksheet with you line by line to tell you how that category would look in your business. Okay, so if you do this based on your business and what you do, because all expenses are not equal across all industries, across every business, right? Just because you do life coaching and I do life coaching doesn't mean that we have the same expenses because we run our business different, right? There are different things that I do that you do or don't do, and vice versa. Okay. And so in that strategy session, I will go through every nook and cranny of your business from the way that you take money in. What are you using? If you're not using Stripe, we're going to talk about Stripe. We're going to go through Stripe. I'm going to lay that out for you. Ways that your money's coming in, the way that your business is set up. How much money did you make last year? I'm asking you a lot of questions about your business because I want to make sure that your foundation is set. If I hear right off top, well, yeah, I'm an LLC, but I'm taxed as an S corp. I'm asking why. How much money did you make last year? Who told you to do that? How many years have you done that? What are you projected to make this year? What are you? I'm asking all the questions because when we get done with our strategy session, you should be able to run your business. You should know exactly what you need to do to bring money in, how you should be set up, what you need to be paying attention to, how you keep track of it, what you do with it after that. And what I teach you in that strategy session does not change unless the services in your business change, the way that you operate changes, or you start making so much money that the things that you're keeping track of are not giving you the maximum tax benefit. Now it's time to incorporate a new strategy. Okay. But once you do this strategy session with me one time, you can take what I tell you and you can run with it for years. Okay. And I'm talking about until you making like 200,000 a year, you can run with that. We might need to add something at that phase, but you can run with what I teach you in a strategy session. 90-minute strategy session is $297. Okay. And like I showed you, anything that you do with me is a write-off because it's teaching you how to maximize your business. Okay. So that's one way that you can work with me. A 90-minute session, $297. And it's a recorded session. I didn't say that part. We come in on Zoom. I record the whole thing. I ask you all the questions. I give you all of this. And it's fine if you're taking notes. But I'm also going to give you the recording after the session is over so that you can go back and be like, now, what is she said something about some. I wrote it down, but I don't understand what I wrote down. Because, we be listening fast. We write fast and we write in phrases. Then we go back and be like, what that mean? I don't even know what that mean. Okay. So that's one way you can work with me. Strategy session. 90 minutes, $297. The other way that you can work with me is I have this 5-week course. It's called Intent to Profit Accelerator. This accelerator goes through, let me see if I can find the slide on it real quick because I just talked about it the other day. And, I know what I did. I think I did. Let me pull it up real quick. Okay. Let me share my screen because it's right here. Share my screen. And let me present. Present. Okay. The other way that you can work with me is this 5-week Intent to Profit course that I created. And it's going to walk you through all the stuff. Now, remember I told you that the IRS has rules. There are 9 rules that they go by to figure out if you playing around or if you really trying to run a business. And we focus in on that on week 1. What does it mean? What does intent to profit mean? That's him. Under the IRS rules, not under my personal rules. What does it mean under the IRS rules? Okay. And we walk through that in week 1. And in week 1, we determine how you need to show your intent to make a profit to the IRS. Okay. Week 2, we walk through the process of creating a business legitimacy blueprint. It's going to be a binder. So if the IRS they don't walk into your business. If they sent you a letter right now and said, I need you to provide me 3 proof of the 3 largest expenses in your business. I need this, I need that. Do you have all of those documents? Do you have all of that proof in one place that you can refer to it? We're going to build that on week 2. Week 3, we're going to talk about how you can audit proof your records and track your expenses. We're going to really dial down on how you keep that information, okay? Week 4 is about marketing and systems. Week 5, again, is how do you stay compliant and confident all year? So once you learn this, once you get all of this stuff in one place and you've got it together, how easy is it for me to use this stuff all year long? That is my absolute goal, is to make sure this stuff is easy and accessible so that you get it one time. And once you got it, you're good. Okay. Now, this is live. The 5-week course is live. This ain't no recorded, nothing. This says 5 live modules, and I really need to fix that because it's 5 weeks of live modules. I'm going to be in there 2 or 3 times a week teaching. You're going to have lifetime access to all of this stuff. You're going to get everything for the binder. We're going to have a community. It's going to be hosted on the school platform. And on Fridays, we're going to do, I'm calling it hot seat coaching, but it's really an opportunity for you to come in and be like, okay, earlier this week you was talking about this, and this, but this is what I got. Is this what you're talking about? Or, hey, I'm kind of stuck on how to do whatever. Okay. And as a bonus, you also going to get your audit proof kit. Now, for the month of November, I'm teaching my butt off and offering office hours, hot seat coaching on Fridays, just as a preview of what's going to be happening in the 5-week course. But once November is over, the level of free that I'm gonna be giving is gonna change. Okay, this 5-week course is $597. Now let me tell you the other option. If you want to get your framework together, if you want to make sure you got everything you need to have together, then you need to be in the course. If you think you got everything together and you just kind of want support, you want some little tidbits here and there, then you need to get in the community. The community is $69 a month. There is no time frame or time limit to you being a part of the community. You can come today, you can leave today. If you leave today, you'll still have access for the rest of the month, but you can come and go in the community as you want. The community is for support. Okay? The thing with the course is I'm only taking 25 people. And every time I teach, I'm going to make the offer. The doors are going to close January 31st or when I get the 25th person. And we're starting the 5-week journey on February 2nd. I time this way because this is the prime time when people are trying to figure out, okay, what all do I need to keep track? What do I need to gather for my taxes? We're going to walk through that 5-week course. You're going to know exactly what you need to have. And then we're going to wrap this thing up like mid-March, and it's going to be perfect timing for you to file your taxes, get your refund, because people that work with me do not owe in taxes. They just don't. They just don't. Okay. I did this twice. Okay. Yeah. So those are the ways that you can work with me. Strategy session, $297, 90 minutes. It's recorded. Again, I get all in your business. I might fuss you out a little bit based on some of the stuff that you tell me, but then I'm going to help you get that thing together. Okay. And again, it's going to be recorded. Anything you need to know regarding your business, that's your time to ask. Like, okay, so I've been doing da-da-da-da. Is this cool? And I'll be like, heck no, or girl, yeah, that's a good idea. That was great. But I'm not just gonna leave you there. I'm gonna say, heck no, don't do that no more. This is what you need to do. Okay. We're gonna figure out what makes the most sense for you based on what's simple and easy. I don't like complicated. I don't like nothing that make me have to try, okay, now because then you're not gonna use it. And it defeats the purpose. You're gonna be right back where you were from the beginning. Okay. So again, 3 ways. I'm sorry, my eye is itching. I don't know why. Strategy session, 90-minute strategy session, recorded strategy session. Listen, 90-minute strategy session, recorded, $297. Or you can do the 5-week course, $597. Or you can get in the community. It's $69. I had somebody ask me, well, what's the time frame on the 5-week course? As long as the spots is open, you can take advantage of that. Okay. But as soon as the 25 spots are open or accounted for, I'm closing that cohort. I'm doing that 5 weeks with them. Mid-March, we'll finish up, and then I'll open it back up top of April, and we'll do it again. But I promise you, though, the next time I do it, it will not be $597 because going through that journey with this first cohort is going to show me things I need to add, things I need to tweak, how I can enhance this process. And when I enhance it, the price is going to be enhanced as well. And so those doors are open until the spots are accounted for. Last thing I want to say, those resources that I shared on the last slide, if you are on a phone, are you on a phone, Shani? Okay. Were you able to scan the QR code? Were you able to get them? Okay. I will email each one of those resources to you so that you don't lose out on getting those just because you were not able to catch it during the presentation. But if you're watching this on the replay and you are not able to get those worksheets for whatever reason, I will make sure, as a matter of fact, I'm gonna put them in the notes on YouTube. So if you do watch the replay then in the notes, the links will be there for you to open up those documents and have them. So it has been my pleasure to teach you tonight, doing what I love. And I hope to see you on the other side.